So we are incredibly honored to have among us today our chief guest, Dr. Kumar Sahoo, Assistant Professor of the Department of Economics. He will talk elaborately regarding this topic. So it's time to invite our chief guest to the forum to speak.
Very good afternoon to everyone. Thank you, Gopavandhu Vicharman, giving me this opportunity to speak in front of this august audience. And I can see that my audience are diverse, though majority are from economics background. So since I belong to economics, I'm a student of economics. So my lecture will be more or less of economics in nature, but I'll try my best to make it general so that everybody understands it. And I'm not going to that much of factuality about all these things, because that you can get it from internet and all these things. And what I'm here is there to answer some of the questions that might come to your mind, and that also came to my mind. So the first question is that so my lecture will be, those questions are actually related to past and the present and the future. So I'll delve into the past, before GST what was there, and why you actually came up with the idea of GST and implemented it, and in that last 8 years of GST implementation, what we actually achieved, and why suddenly this new GST, that is GST 2.0 reform came up, even though there was an opportunity to actually reform it quite before. If this is really beneficial, it should have been actually before. So if it is so, then what actually pulled back government not to to reform? Why now suddenly that began in the era of Trump tariff? So is it related to tariff war game and its consequent implications, especially is this GST reform 2.0 is actually a response to Trump's tariff, or it is genuinely, the government was genuinely concerned about the people and people's pockets? So the first question that comes to my mind is, why this GST, why did this GST as a tax structure come up over VAT? Before GST, there was VAT. VAT was actually introduced in 2005, I think, in around April or May, I think. So this GST is more or similar to VAT. That is, value-added tax is nothing but you are taxing on the value that you have on a particular product. That means as a supplier, I bought this material and I add some value to it. That means water, I bought water and this bottle, and I packaged it and I generate some value. So the tax will be on the addition of that value. So that is what actually VAT was there. But what was the problem with VAT? The problem with the VAT is that, in the VAT system, there was a cascading effect of VAT. Before VAT, the cascading effect was huge, but we could reduce the cascading effect under VAT. But still, we had cascading effect in terms of because of different tax structure. That is, there was excise duty. Excise duty means when something is manufactured, so central government levies some tax. That is called excise duty. Once that is manufactured and it comes to the, let's say, retail, and that is been sold, then you have VAT. VAT is applied there. So the retailer doesn't get that input credit that used to we are getting under the system of GST. Under the VAT system, it was not possible. The input credit tax system was not there under VAT system. Are you getting my point? What is input credit system? Input credit means, as a manufacturer, you buy something from another manufacturer. So that becomes your raw material. So in that raw material, since you are buying, you pay some tax. And when you are selling, after making a good out of that raw material, you manufactured something and you sold it to the wholesaler. So wholesaler bought from you as a manufacturer. So wholesaler will pay tax to the government, and as a manufacturer will also pay tax to the government, and the input seller also pay tax to the government. Each player under the supply chain can actually apply for the input credit. That means the tax that is being imposed upon that input, that you can actually get it from the government, just like you actually file ITR as a personal income tax payer. This is what is that is there in the GST, but it was not there in the case of VAT. So it's an improvement. Obviously GST is an improvement. That means we could actually get rid of that cascading effect under that GST system. So under that VAT, we have now one nation, one tax system. One nation, one tax system. And so this one nation, one tax system actually simplified the taxation system or a taxation structure. So GST is a really good reform. GST 1.0 or first GST when it was implemented, but the timing, all these things, that is debatable, because it was actually implemented just after demonetization, so our economy was not performing well, and because of demonetization, there was so much of our informal sector was actually collapsed, and our informal sector is the kind of blood flow of our economy, and when you are sucking out all the blood from the economy, that means economic collapse. You have already read and experienced during that demonetization system what was the situation there, and our economy was not recovered properly. Thereafter again this GST new system came in, and there was so much of problem with GST, and the problems or achievements are quite good. That is what I said, the key elimination of cascading effect, creation of a unified national market, formalization of economy. That means we could actually somehow integrated our informal sector and formal sector somehow in that process, and our tax revenue actually increased drastically, and our complex system actually got simplified. But that is again debatable. That complex system, especially initial level, if you can see, you can also you must have come across articles that small traders and various traders are actually facing problem of compliance of GST taxation. Why it is so? Because of the complicated nature. You must have come across that video, that viral video, when a restaurant owner was actually pleading in front of our finance minister, Sitaramanji, Madam, when we are actually selling a piece of bread, then it is some tax structure, if we are caramelizing it, and then it's a different tax structure. So it is becoming very difficult as a service provider to comply or to get the ITC, that is input credit system, that is the compliance structure. So it was complicated. And so in that way, our GST 2.0 is actually an improvement. That means we have actually now out of instead of 5 slabs, we have now reduced to actually 2 slabs. So 5 slabs means 0%, 0.25%, then 3%, and 5%, 12%, 18 and 28. Now it has been reduced to actually again 0, 5 and 18. 0 is also a percentage. This is also a slab. You should not actually ignore because it has its implications. Understand? So that way I can say that this GST is actually, this 2.0 is actually improvement over 1.0. GST 1.0. That's a good thing. And you must have actually come across that some of the essential goods were actually taxed 5%, 12% or something, which actually in this GST 2.0 actually come under either 0% or 5%. It's a welcome thing. But this is what the present is. what is the feature, what is the implication of this GST 2.0? That is what I am going to actually deliver here, and some of my previous speakers actually highlighted it. I'll try to repeat those things, because I will try to actually simplify them, and also add some of the points why it is actually for pro people and why not. So I will actually give both accounts. I will not be only sticking to either of them. So it will be actually of both. And when I say both, that means when I say it is not for people, that means when it is not pro people, that means I am giving suggestion what it could have been actually. Okay. So as you can see, why it is pro people, because it lowers the taxes on essential goods, and our middle class, who are the aspiring community, they can actually afford to have most of the goods. Especially you can see these days, marriage is becoming costlier. Do you agree or not? So recent time relative you just ask them how much money you have actually spent on gold and jewelry. Tax rate things is actually in good side. So affordability of aspirations, that's a good thing. And there are good things like health sector is actually will be actually in positive side. That means our insurance is now taxed with 0%. It was earlier 12%, so it is now taxed 0%. It's a good thing. And some of the farming equipments and your inputs are actually taxed now at 5% or 0%, depending upon the types of goods, farming goods. The fertilizer has now actually reduced from 18% to I think 12%. 12 or 5%, I think, 5%. It's a 5% from 12 to 5 now, or 18 to 5.
Sir, from 12 to 5.
12 to 5. It's a good thing. So that means our cost of production of farming will decline, and production of farming will increase. So does the supply of goods and services, so does our price of the farming goods. So it's a welcome change. But there are certain caveats. I think my previous speaker, Adyasa, actually told about the state budget. I agree to her points. That means because of the reduced, GST rate, now the state governments are actually going to have, their tax revenue is going to get hit. Why it is so? Because especially your health and education sector is primarily a state subject. It's primarily a state subject. Even though it comes under kind of concurrently, still it is primarily a state subject. So state actually hugely spend on education and health. So when government's revenue is actually squeezed because of the reduction of the tax structure, tax slab, so the state government will actually not spend much on health and education. And so does on the welfare programs. So does the central government. Central government is not, the central government's revenue is not increasing. They may directly reduce the, MNRGA fund. MNRGA, that is National Mahatma Gandhi National Rural Employment Guarantee Act. So you can actually find it in the book, YouTube, that once Prime Minister Modi advocated in the house, in the lower house, the Lok Sabha, that Congress ka jo Congress ra jo 70 years ra jo rule ra jo mane poverty issue nicha achi tar eta hoji kona this is a reflection of this scheme. The scheme is a reflection of keeping the poor people, keeping the people poor. So mane se indirectly kohile je hint deythile je he is not in favor of MNRG. But when this Corona came, he realized that this MNRGA is the best way to actually provide money to the people, so that they can spend and increase their spending, and so does the aggregate demand. So when the GST is actually GST revenue is declining, that means it is going to affect the revenue of the central government. So probably central government may reduce its welfare spending in coming or near future. And though GST is an economic measures, but it deeply actually is political in nature. Though GST is an economic measure, but it has its own political implications. Why it's a political implication? What is its political implication? There is a famous political scientist. His name is Partha Chatterjee. So he distinguished society into two types. One is political society, and the other is called your civil society. Who are the civil society? Those who are actually, he calls them legitimate actors. He calls them legitimate actors, that is your middle class and tax paying people. They are legitimate actors because they are actually they directly get benefits from the government. They come under social security things. Just like we are the teachers, then we are the government employees, we come under certain social security. Here the informal workers and marginalized groups, they are considered as political society, and their demands and their willings are actually negotiated by patronage rather than giving them rights. Rather than giving them rights, their demands, willings are actually patronized. They are negotiated. Their demands are actually negotiated rather than given rights. So how this GST is going to affect these two types of society or segmented society? Since these legitimate society that are legitimate actors, that is called your civil society, they have much more bargaining power than over this your political society. So when they pay tax, they pay more tax, they actually demand more. So when this tax structure is actually reduced, they are actually getting more benefited compared to this lower section or marginalized sections. And as far as this impact of this GST is concerned, I think no doubt aggregate demand will increase. No doubt aggregate demand will actually increase, but that is not sufficient enough to outweigh the kind of revenue loss that government is going to face. And if you go by some of the statistics, some economic statistics, it is around 1 lakh crore. 1 lakh crore deficit that revenue loss that government is going to face in next 1 year. Some estimates say it around 45,000 crore. Some estimate, larger estimate is it is around 1 lakh crore. So when there is decline in revenue, obviously there will be increase in the fiscal deficit. Fiscal deficit is nothing but your what is the earnings of the government and what is your expenditure. So when earnings is declining and expenditure always bigger than your revenue, obviously fiscal deficit is going to increase, and when fiscal deficit is increasing, that fiscal deficit has to be actually met by your deficit financing. And when you are doing it by deficit financing, you are meeting your fiscal deficit by deficit financing. It has a long-term impact, that is inflationary pressure will be there in the long run. There will be inflation. So in aggregation, if you see the net effect of this reduction of GST 2.0 reform is not going to actually beneficial in terms of economically, it is not that much beneficial. What I could actually sense it. And as far as the social cost of this GST is concerned, this social cost is not that much visible in nature. There is an economic cost, there is a social cost. Example, it if you go to Gujarat, okay, most of the Gujarat is an economy which is kind of entrepreneurship economy, and in India and most of the parts of in India, you will find that our industry sector is actually informal in nature. That means around 85% of the total production comes from that informal sector only, and informal sector has the highest employment provider sector. That means most of our people are actually getting employment from that sector. And in that informal sector, you will find most of the MSMEs are actually operating. What is your MSME? That is micro, small and medium sector, enterprise sector. If you see the MSME, and in that MSME, as far as units are concerned, your small and medium enterprises are around 6 lakh. Around 6 lakh. Whereas your micro entrepreneurs are around 7.5 crore units. 7.5 crore units. That means most of our enterprises are of nature of micro units, whose investment is not more than 1 crore. Micro units. And these micro units, out of those micro units, 97% are actually unregistered. Most of them are not registered. So when this GST 2.0, where we find that there is a reduction in the tax rate, who are getting actually benefited out of it? Especially under this MSMEs, actually small and medium sector organized. MSME रे तुम्हारा होचन 97% का होचन कोई कौन unorganized. Under MSME, out of 100 MSMEs, you will find 97 are actually unorganized. They are not registered. Only 3 are actually registered. Understood? Under that registered, you will find again most of them are actually very small. Their spending or their turnover is not more than 1 crore. Very small. So what happens? Because of this unregisteredness, and your registered and unregistered one are actually intertwined, and your registered companies are actually buying raw materials from the unregistered one. Since they are unregistered, they cannot actually demand or file for input tax credit, that is ITC, that is commonly known as ITC. That means the kind of tax they actually pay because of selling their inputs to the manufacturers, that tax they cannot actually get it from the government by complying that, because they are not registered, they are not coming under GST. Since these registered companies are actually taking raw materials from these unregistered companies, when they actually comply for this GST, they also cannot demand for that input credit. Why? Because they are not registered. Your lower bottom sides are actually not registered. That is why there is a concept called inverted duty. What is inverted duty? Inverted duty means your raw materials, the tax GST rate on the raw materials is higher than the manufacturer or end product GST. Are you getting my point? Just like, let's say this belt is actually made of your leather. So when you are buying leather from the, let's say, one unregistered company, small trader, then you are paying, let's say, you are paying some amount, okay? You are paying some tax because that person sold that leather to you. But when you made it as a belt, you are, let's say, paying 5% tax to the government. So that is called inverted duty, because your input tax is higher than your end product or manufactured good product. As a result, what happens? These small traders are becoming kind of uncompetitive. Their price remains the same. They are not enjoying because of the reduction of the tax rate. they are becoming uncompetitive with their competitors because their price is not reducing. Why their price is not reducing? Because they are not able to get the input credits. As a result, when this GST started, you will find there are so many micro entrepreneurs got stopped. They actually packed up their shops and went out. So since these micro entrepreneurs are actually the sector where most of the employment is actually you will find. So when they are shutting down, your employment is actually declining. So this GST 2.0 reform may actually affect our employment prospect. So this is another point that I want to highlight. I'll take another 5 minutes to complete. And our compliance structure has not actually got simplified the way it should have been. The traders are still facing compliance problem. And another factor that I want to highlight here is that with an example is that Punjab used to be a very industrialist society. Used to be. If not that much the way the Tamil Nadu and any other states are like, but they used to be industrialized. And this industrialization happens in a particular state. That means that particular state government gives certain rebates to those companies. That rebate in terms of VAT, reduction in VAT or excise duty or something like that. That liberty is not there now under GST. Under the VAT system it was there. Since because of the GST, now everything is actually centralized. That discretion is not there among the states. So the states are not becoming actually competitive. They are not able to actually make themselves competitive to others. Are you getting my point? So this is another problem that states are going to face. And as far as another sector that I am going to highlight and complete probably is the transport sector. In the transport sector, the way these days the gig sector is actually mushrooming. Gig sector, that is your Zomato, Swiggy, or this delivery sector. Okay. And this transport sector, you have two brackets: tax slabs, 5% and 18%. Okay. 5% for transport equipments like tires or rubbers or something that is used for transportation. Whereas for delivery it is 18% because delivery is considered as service, so it is 18%. And your petrol and diesel are not coming under this GST. That's the biggest problem. And this I'll come back to that. That since petrol and diesels are not coming under GST, so our petrol and diesel price has not actually declined substantially. So the cost of transportation is still remain high. So when delivery is the delivery sector is increasing, but all the sectors are actually the tax because of this 2.0, the cost of production is declining, whereas your delivery sector cost of production is not actually declining. As a result, what happens? Either this delivery company will actually reduce their services. In return, that you will find that there will be so much of unemployment, or they will actually reduce the payment to the gig workers, informal workers. Earlier for delivery, let's say they were getting benefit of 40 rupees, let's say now they will be actually reduced to let's say 20 rupees to make themselves actually make their competitiveness. Okay. Make themselves competitive. So transport sector is going to get affected both positively and negatively. And coming back to that, why there was no GST on petroleum products, especially diesel, and I think they should have actually included that petroleum products, especially petrol and diesel, because that is actually have a cascading effect on our consumer goods prices. Since it is not coming under the GST, reform 2.0, I think government has actually missed the chance to do it. And in conclusion, I can say this sudden reform is just like a reaction to what is happening in Trump 2.0 era. That is actually since Trump suddenly increased the tariff rate from 25% to 50%, our export is going to hugely getting affected. The estimate shows that around 4.5 lakh crores of export value is getting actually affected. So when you are not able to sell your surplus product, that is called your export in world market, then that has to be actually consumed within the market. So for that reason, probably government actually has declined the GST rate to accommodate or to increase the aggregate demand, so that the loss that we are going to face for that decline in export can be actually compensated through this increase in aggregate demand. But my person is that it's a very reactionary one that could have been actually dialogue and discussion through the better, and they are actually ignoring the federal structure. If you come into the political nature of this kind of reform, they are actually simply ignoring the federal structure, because GST is a federal structure tax system, because every state government has to have their own say. Since most of the state governments are of BJP government, so overnight they have actually got all the votes that is required to get past this act. So I think it's a not a democratic way of dealing this kind of reform. So with this, I say that GST reform is good in a sense, but in near future, I see that the bad will actually outweigh the goodness. Let's see what is going to happen. With this, I conclude my lecture. So I'm open to question. Thank you very much for listening.